What's up, Facebook? Ty Crandall with Credit Suite here, and today we're diving into fundability. We're actually talking about the fundamentals of fundability. We're going to talk about a lot of the things associated with your industry code, and many other things that you're setting up in your business initially that control your ability to get credit and financing. So let me explain to you why this is so important. The vast majority of loan applications are denied not because you don't have the credit or income to qualify. They're denied because you don't meet basic fundability requirements that lenders and credit issuers have. So think of it like this. All lenders and credit issuers have a set of standards you must meet to get approved for credit and financing. If you meet these standards, well then good chances you can get automated approvals. Their computers are approving you automatically and instantaneously. But if you don't meet these criteria, what happens is your application gets pushed for a manual review. And manual review, those reviews are scrutinized very much by whoever it is that's doing the review, and most of those applications end up getting denied. So there's a lot of things about fundability, some things we've never really dove into before that we're going to dive into today. So think of it like this. Today we're going to be diving in, or we're going to be pulling back the curtain and showing you exactly what these computers are looking for, so you'll know you get approved before you even apply. So think of it like this. I say that again. So think of it like this. When you go to get a credit card, you've had one of two outcomes. You've applied and got an immediate automated approval, or you've applied and got that dreaded message you'll hear by mail in 7 to 10 days. All loans, all credit lines, all credit cards are done the same way. Computer underwrites first. Whatever the computer doesn't like, if there's enough things the computer doesn't like, it throws up enough red flags, it pushes it to manual review, and manual reviews where the nastiness of declines typically happens. So our goal has to be to get you automated immediate approvals. By getting you automated and immediate approvals, then you bypass that manual review and you get the money quicker that you want. You have a better chance of getting approved. But again, here's the crazy part. The majority of applications are not turned down because of your credit. They're not turned down because of your revenue. They're not turned down because of your time in business. They're turned down because you don't meet basic parameters they're looking for to determine if your application's valid, to see if it's really legitimate or it's fraud, or even that you meet basic requirements that you must meet in order to get approved. So let's dive in. Fundamentals of fundability. We're going to talk a lot about your industry data points today. So when I talk about fundability, I'm just talking about something simple. Do you deserve to get or capable of getting funded? Okay, per the lender standards, do you deserve to get the money? Are you capable of paying that back? Do you meet their basic requirements? So this is basically what lenders and credit issuers look for. And that's what's important. Think of it like this. It's like an open book test. If you come in and you know exactly what they're looking for, you can, like a checklist, meet those requirements before you apply. Then you come in, it gets fed into their computer, check, and that's how you get it approved. So that's what fundability is, lendability, fundability. It all comes down to your capability of getting funded, of understanding what lenders or credit issuers are looking for. Let's start right here. High-risk industries. So these are harder to get money than lower risk industries. And there's a lot of things that can make an industry high risk. Maybe there's a high risk of somebody getting injured on the job. Okay, maybe there's a lot of cash transactions. Okay, maybe the SIC is seen as high risk. Maybe it's like energy or oil or trade, or it's a pawn shop or it's a restaurant. There's a lot of reasons that industries are deemed high risk. Now, part of that happens at an actual lender level. So some lenders lend money to one industry like accountants, and they see unusual default rates with that industry, and they then deem that industry to be high risk. That's why you should always work with brokers that can help you get your loan done and work with multiple lenders. Because as crazy as it is, we see a lot of lenders that offer the exact same product that some deem some industries to be high risk, some deem others to not be high risk, or some others don't deem those same industries to be high risk. So for example, you could be an accountant and be deemed as high risk in one lender with the same product, and go to a different lender that offers the exact same product and not be high risk. So a part of it is at an actual bank level. So that means that if their defaults are higher with a certain industry, they deem you to be high risk. Some are just deemed to be high risk by the government themselves because they deal with high cash transactions, which makes it more prone to money laundering because a lot of cash is flowing through those. So for example, pawn shops. Pawn shops are deemed to be high risk because a lot of potential stolen goods can go through pawn shops. They deal with a lot of cash transactions. So the government doesn't like those kind of industries. Then there's some kind of other industries that are just looked at high risk because of how the actual business is structured, how that industry itself is structured. There's a lot of things that make an industry high risk, but choosing the right NAICS code is very important so you're not looked at as high risk. Now, I've dove into this topic once, so I'm not going to spend a lot of time talking about different NAICS codes, but I will tell you, if you come in and you just do a simple Google search for NAICS codes, you'll find some very good places, like right here, NAICS code search. It's completely free to see what industry you're in. And here's why it's important. Some people might say that they're in retail, but as you can see, when you really drill retail down, there's many different subcategories of retail. Now, you need to know this because, for example, choosing this right code becomes very, very, very important for you. And again, I've done detailed training on just this before, but you can actually see that if you just do a simple Google search for NAICS codes, you'll go to NAICS.com, and right here, you can do a very good job of drilling down your specific sub-industry. Now, that's why this becomes so important. And Daniela says, how about a startup business? Can they help? Yes. Startup businesses have it the easiest because you can meet all the criteria I'm going to go over today and have your business set up the right way and not try to have to change it because you've done it the wrong way. So here's what to know about NAICS codes. You choose it or it's chosen for you, and that's the problem. Most people don't know their NAICS code. Do you know your 4-digit NAICS code? An NAICS code is an industry code that's assigned to you, or actually, that the government uses to classify your business. Now, it used to be an SIC code, but the SIC code categories were smaller. There were like 16. The NAICS code is the government's way of expanding out and being able to have more categories for more industries. So what you need to do is you need to decide what your NAICS code is. You need to go into a search like I just showed you, figure out what your own NAICS code is, and whenever you fill out an application for credit or financing, you want to put exactly what that industry is and the actual code. Here, let's go back and let me give you an example. So if we come in here and we see that we are retail trade and we have decided that we are right here, I love this, motorcycle dealers, because I love motorcycles. So we are a motorcycle dealer here, 441228. That's even very specific, okay? So now, if this is in our NAICS code, when I come in and apply, I'm going to say I'm a motorcycle dealer and my NAICS is 441228. Or I'm a boat dealer and my NAICS is 441222. And here's why this is important. When you apply that way, nobody does that. But when you apply that way and they say what industry you are and you say, I'm a boat dealer, here's my NAICS code, you don't leave it open to interpretation. You're telling them exactly what your code is. So let me explain why this is so important. For example, if you look at Credit Suite, we could be software company, we could be financial services. We sell software, financial services software, but we're in the financial services industry. But here's what we know. Financial services is high risk. So we chose software. Now, we didn't just make up some industry that's not relevant to us. We chose an industry that's very relevant to us, the software industry. We also intentionally chose one that puts us in a lower risk category. Now, when we file our taxes, we file under our NAICS code. When we fill out applications, we put the NAICS code and software for services. So we put the NAICS code that we are, the name of it, and the actual code. Now, what will happen is inevitably some people will pick up and change that, say that we're in a different industry than we are. So a lender may say, nah, look, we're going to consider you to be financial services. They may even tell the credit bureaus this. We then dispute with the credit bureaus, prove per our tax returns and the other reporting agencies that we're wanting an NAICS code, and we have them remove that from our credit reports. The same thing with lenders. If we go in to apply and they say we can't approve you because you're high risk, we're saying, how is software high risk? No, you're not software, you're financial services. Says who? Here's our tax returns that shows our NAICS code. Here's what the credit bureaus say. They all say we're in the same NAICS code. How can you say we're in an industry we're not even in? You don't get to just make up our industry. The IRS has deemed the industry that we're in is here. Here's our tax return that shows that. Here's the credit bureaus. Here's Experian. Here's Equifax. Here's Dun & Bradstreet. They all say we're in the same code. How are you saying we're something different? They can't refute that. So that's why you need to choose. If you don't choose and that same lender has a choice, what do you think they're going to go with? they're going to go with higher risk so they can charge you more money. It's common sense. If they get to choose between us being software or us being financial services, of course they're going to choose financial services. That means they can charge us higher interest because they're saying we're high risk when we're not. Now, the travel business is, and I don't know why, some NAICS codes, I have no idea why they're deemed as higher risk, but travel agencies, for some reason in lending, are seen as higher risk industries. So that doesn't mean you won't get approved. What it means is there's two different levels of this. One are called restricted. You can't get approved if you're those industries. So for example, let's say you're in the porn business. It's pretty tough to get money in the porn business because the porn business is a restricted industry from a lot of lenders. I know I'm letting a lot of you guys down and deflating your dreams, but that's the truth. Porn is seen as a restricted industry for a lot of lenders and credit issuers. So if you're in that industry, you're not even going to get approved. Then there's ones that face more stringent underwriting guidelines. Travel is one of those. So travel, you're just going to be harder to get approved. It's one of those little red flags that goes up, but not a lot. The key to fundability is not have a lot of red flags that come up. The more red flags that come up, the better chance that you're going to get denied. So that's what you need to know about NAICS codes. You have to choose your own industry and try to choose a lower NAICS code. And make sure that that is addressed on all of your records. You need to make sure that it's the same or the lender could presume that it's fraud. So you got to make sure that every record's identical. You got to even copy and paste the NAICS code. Again, as I mentioned, whenever we go to apply for a loan or a credit line, our applications always say the same thing. We make sure that our tax returns say the same thing. It's all the exact same things. Now, I also mentioned here report possible fraud, and here that's why it's important. Because with fraud, over half of all loan applications are denied because of potential fraud concerns. Look, banks are buried with fraud, and the majority of applications they get are not even legit. They're fake applications. So when you apply, believe it or not, their first requirement is not to see if you should be approved. The first requirement is to see if your application is even legitimate or if it's fraud. It's the first thing the lender's looking for. So you're going to see, I'm going to talk about a lot of stuff today that alludes to the same point. When lenders see mismatched information, it throws up a red flag of potential fraud. I mean, after all, how would somebody apply for financing and not even understand what their own industry is? So this is what lenders are looking at, is that when this mismatched information happens, they oftentimes believe that it's potential fraud and deny the application for that reason. So we've got to make sure we've got the right industry code. We've also got to make sure that that's aligned on all of our records. We also need to try to choose a business name that doesn't show that we're in a risky, high-risk industry. If given a choice, we don't want the name itself to trigger denials. We don't want the name of the business itself to trigger high risk, to trigger potential fraud, to trigger actual denials or red flag it so it gets manually reviewed because the business name indicates that you're in a high risk industry. So you've got to make sure that we come in and we avoid risky industries in the name. So if we are in the porn business, we don't want to put porn in our name. Okay, we want to do something like sexual consulting or something crazy like that that doesn't reflect that we're in a high-risk industry. I like that. Sexual consulting is perfect. That's what they should all call themselves. Okay, so you've got to understand that you've got to keep out of this risky industry category. Now, you also need to make sure that your listed ownership is uniform with your Secretary of State. As a matter of fact, your Secretary of State is very important. You need to make sure that all your records with your Secretary of State are accurate, are up to date, and that your business itself actually is active, as I'll talk about later here in a few minutes. You got to make sure that that entity is even still active. So while you're with Secretary of State, make sure you do those things as well. You need to have a searchable website. Your website needs to be a professional website. You need to get it hosted. You want to avoid Weebly. You want to avoid Wix. And the reason for this is that your site is hosted on their domains. You don't want that. You want your own domain. It's got to be your own domain. Okay, now you can use places like Upwork or Fiverr to hire somebody to do the domain for you very cheap. Okay, we use Custom Marketer. Okay, Keith Knapp does a great job, Custom Marketer. But the bottom line is your website should reflect what you do. They should be able to go to your website and get a pretty good, accurate idea of what you do per your actual website. If your website doesn't reflect what you do, then that alone can get you turned down because lenders and credit issuers don't want to be left guessing. They need to know that. So having a professional website set up is very important, and you also should have your business name be your website. It's very important, especially if you're in a startup phase. Our website is creditsuite.com. We would have never chosen the name Credit Suite if the name Credit Suite wasn't available. We bought that, and we made sure we could secure it before we chose the name Credit Suite. If you have a name of your website that's different than your company name, it throws up red flags. It just doesn't make you look as credible. Think about it. There's no big publicly or privately owned company that doesn't have their name that they own as their domain. Okay, so, and I thought about this with Alphabet. When Google became Alphabet, I'm like, who owns Alphabet.com? That company is rich now, because you know they sold Alphabet.com to Google for a lot of money. Okay, because you need to own your domain.com. It makes you look credible, and your email needs to align with that as well. My email, info@creditsuite.com. Website, creditsuite.com. It all needs to align. If it doesn't align, then what happens is it throws up all kinds of red flags because it just doesn't make you look legitimate. It doesn't make you look credible. So getting that searchable website set up is very, very important, and making sure that your business name is in that domain is very important. Let's talk about business addresses. It should be a real deliverable physical business address. You never want to use a P.O. box. You never want to use a UPS address. You can use a home address as last resort. Some lenders are not going to approve you if you are using these criteria. If you're using UPS, if you're using P.O. Box, if you're using a home address, a lot of sources aren't going to approve you. So how do you do it? You get a virtual address instead. A virtual address is where you rent the physical address, but you're not actually at that location. So let me give you an example. Regis owns high-rise building in Tampa, Florida. I can get an address in that high-rise building. Anybody that looks up my address sees it's a commercial address in a high-rise building in Tampa, Florida. It makes me look more credible. But if I get a UPS box or a P.O. box, those are housed in a certain database that lenders and credit issuers pull from. So the minute you use a UPS address, the lender knows it's a UPS address. I know people may have tried to convince you that's not the case, but it is 100% the case. When you use a UPS address, they know it's a UPS address, and it throws up a red flag. And a lot of sources won't approve you as a result of that. Now, if you use a home address, sometimes you're okay, sometimes you're not. Let me give you an example. If you use a home address while you build business credit, you can absolutely 100% get approved with Amazon, but you absolutely 100% cannot get approved with Walmart. So that's an example. If you use a home address, some sources like Amazon will still approve you, but other sources like Walmart won't approve you. And the problem is you won't know why. When you get denied Walmart, you won't know it's because of the address. That's why if you don't do what I'm telling you today, you miss a fundability point here, you miss a fundability point there, you miss a fundability point there. What you get is start getting denial, and you don't know exactly why. But if you get your fundability set up the right way, you get approval, and you don't get those denials because your business is structured the right way. So again, everything I'm showing you today, some sources may approve you. Some sources might not. You're in a high-risk industry. Some may approve you. Some might not. You don't have your business name be your company name isn't your website. Some sources may approve you. Some won't. Your address isn't set up. It's a home address. Some will approve you. Some won't. But the problem is you added up enough of these chinks in your armor. Chink, chink, chink. Address is personal, okay? Website's not the company name, chink. High risk, chink. You get enough of those little chinks in your armor, those red flags, it immediately pushes you for manual review, which gets you denied, which is the one thing that we're trying to prevent. So getting that website set up, that email set up, getting that address set up is very important. Your business phone number, it can be a voice over IP, needs to be toll free, okay? You also cannot use a cell or a home phone. Okay, and you should have a professional voicemail greeting set up to let them know that they actually reached a business. Look, we use the same technology that lenders use. And our technology tells us the minute you enter your phone, the minute you enter it, we know whether it's a cell phone, voice over IP, business landline phone number, or a home phone. We know right away, the lenders know right away. What kind of person runs a legitimate business using a home phone number? Nobody. Who else uses a legitimate business using a mobile phone? Nobody. So lenders and credit issuers are going to have a serious problem. This can get you denied. And if your phone number is not listed with 411, that will get you denied. And here's why. You can't fake 411. 411.com is not even 411. So you can't go list yourself with 411 unless you find a third-party service like List Yourself, which very few people know about, to do that. So in order to be listed with 411, you have to organically be picked up by Yellow Pages, by Google, etc. And that doesn't happen unless you actually are in business long enough. So they use it as like a time in business safeguard. The only people that are listed with 411 have legitimate businesses that have been open for a while. They're on Google, they're on Bing, they're on Yahoo, they're on Yellow Pages. Then you get listed with 411. So that's a basic requirement that a lot of lenders and credit issuers. Now, Portia, what's up? It says, and make the Regis suite unique. You can do that. In some cases, you can't. And that's okay. Because business credit profiles especially are linked to every address for a similar business name. So if you have no business name that's sharing that address that's similar to yours, you're still okay even if the address is shared with somebody else. And it's harder and harder, Portia, to get addresses that are not shared. But if you can, absolutely brilliant point. You definitely want to do that. And Portia says, I have a parent company and doing business as the credit name. Okay, that's perfect. But you need to keep in mind that when you apply for credit or financing, you need to consider putting your actual company name and the DBA. And here's why. The number one reason loans and credit are denied, the number one reason, this is mind-blowing. I mean, blow your mind. The number one reason that lenders turn down loans is because they can't verify your business exists. That's it. What happens is you apply under ABC Company. Then they go to look at Secretary of State for ABC Company. Maybe you change the name. Maybe you have a DBA. Maybe ABC Company is your DBA. They can't verify that business exactly per address, per phone number, name with Secretary of State. This is why we do a free fundability check. If you're interested in seeing how fundable your business is, you can give us a ring and we'll do this for you for free. And what we do is we go online, look at the places like Secretary of State that lenders look at. We do the comparison and tell you if you have problems. We also help you get your business credit reports for free as well. And we also help see if you're set up with the reporting agencies for free. So you'll get an idea of your general fundability. It's very, very, very important. Portia says, thank you very much. I'm a fan of your, by the way. Thank you, Portia. I'm a fan of yours. I love your name, by the way. It's awesome. I started this business because of you. That's awesome. I'm glad to hear that I had an influence. Thank you very much for that. I have 1-800 number through call rail. Yes, that's fine. That sounds good. Oh, okay. So that's what it comes down to. So when it comes down to phone numbers, you got to make sure you get this phone number listed with 411. Listyourself.net is a shortcut I'm giving you guys. Listyourself.net. Now, time in business does matter. The incorporation date does matter. The earlier the business, the better. But here's the kicker. You cannot buy a shelf corporation. You just need to avoid it under all costs. And here's why. Shelf corporations, when you buy a shelf corporation, the ownership of the business changes. That ownership change automatically throws up a red flag on your business credit reports and alerts other credit issuers that a change in business has taken place. Now, they immediately think that you may have bought a shelf corp. Then they look at your bank account start date instead of your incorporation date. So you need to make sure that you don't buy shelf corporations. Because if you buy a shelf corporation to convince lenders and credit issuers you've been open longer than you have, you can't fake it with them. They know it. They go, oh, red flag, ownership change. We're just going to look at your bank account open date instead just to be safe. So you got to make sure you're very careful there because, again, when it comes down to time in business, you can't fake that. If you try to fake it through Secretary of State, you're going to, or through through a shelf corp, you're going to cause yourself more harm than good. And let me explain that. The business credit reporting agencies, when they know you buy a shelf corporation, they shut down your credit profile. It's gone. It's done. It's over. It doesn't exist. We get these calls all the time. Hey, I had a credit profile with Dun & Bradstreet. I logged on and it's gone. What happened? And we ask the same question. Well, did you buy trade lines? We actually ask them, which did you do? Buy a shelf corporation or buy trade lines? They say they bought one, and that's what happens. When the bureaus know that you bought a shelf corporation, and here's how they know. Because the company that owned it before is already red flagged with them. The company and the owner that you're transferring from has already been red flagged. So the minute you transfer that to you, they associate you with the red flag company and you're in trouble. The minute they shut down your credit profile because they know you did this, you don't get it back. It's over. It's gone. And it's sad. We see some people buy shelf corporations, build a lot of real legitimate credit on top of that corporation. Then they lose their credit profile because years later, the bureaus associate them back to the company that sold them the fake shelf corporation. It's not worth it. You can't fake time in business. You just have to wait that out. You don't ever want to come in and buy a shelf corporation. As I mentioned, you want to check with the Secretary of State. You need to make sure that they're in good standing with them. You have to have your company actually active with them. It's something you need to check when you're looking at the Secretary of State. Your business license, do you have one? If so, is the actual issue date, or actually is it up to date? You need to make sure that that's the case. A lot of lenders and credit issuers will actually approve you just because you have a business license. So Granger is one of the best. Granger will give you a $2,500 credit line to start your business credit. Not even once you have business credit established. Granger will give you a $2,500 credit line just because you have a business license. So if you can get a license for your industry or get a license for your state, get one. Having a license is looked at it's weighted so heavily with credit issuers and lenders into your credibility. They love having that business license. Get a business bank account set up. You got to separate your personal and business assets. Okay, you need to separate your expenses. You need to be able, the easiest way to separate them is by getting separate bank accounts. Okay, and as I mentioned, that bank account start date can be seen as when your business actually started if you have anything like an ownership change in your business. Okay, the longer history you have with your bank, the better. Okay, and the bank or business credit reporting agencies love this. They really look at this, but again, they're looking for shelf corporations, and they look at this date when they see that. So you've got to make sure that you're okay. Another reason that you need to have this business bank account set up is something I covered last week. It's called your bank rating. A lot of people don't know this, but you have 3 types of credit: consumer credit, business credit or commercial credit, and bank credit. There's an internal credit scoring system the banks have to see if you're high risk or not. And you need to make sure that you're coming in and you're actually setting up your bank account as soon as possible, because that affects your bank rating. How long you've had your bank account affects your bank rating. Now, let me give you another tip here as well. It's called Check Systems, and I'm going to tell you how to access it. If you go to creditsuite.com/check systems, and it's CHEYREX, you're going to love it. You're going to love this. Okay, let me show you what you're going to get. Here's the link, creditsuite.com/check systems. Now, if you go to that link, then on this page, I'm getting you access at no cost to your Check Systems credit report, your Check Systems credit score. You can add and remove security freezes to your credit report. You can also add a security alert to your credit report, and you can dispute information with Check Systems I gave you all the links you need at creditsuite.com/check systems. It's 100% free to get this. And here's why you need to do this. Because lenders and credit issuers look at your banking history to determine your risk of getting approved. And there's a whole credit report that's secret that you don't even know about. You have a credit report, you have a credit score that rates how you handle your banking history that they're looking at. And guess what? You can get that report. You can get that score. You can put security freezes on there. You could dispute it just like you can consumer credit. But you need to get that, because this is the secret stuff that lenders and credit issuers look at behind the scenes that you don't know about. So get that bank account set up for the business. Separate it. Helps your bank rating. And also manage what's going on and what they know about how you handle your personal and business banking by going to creditsuite.com/check systems to know what they know about how you handle your banking account. Okay, the same thing as I mentioned with checking account history. This is all with Check Systems. Now, to have the best bank rating you can have, you want to keep $10,000 in your account 3 months before you go to apply for a big loan like an actual SBA loan. SBA loans, they will look at bank rating. Any money that comes from a bank will look at your bank rating. To have the lowest bank rating that's acceptable, you need to have $10,000 in your bank account 90 days before you apply, or 90 days on average. So here's how your bank rating works. It looks at what you've kept in your bank account over the last 90 days. It averages it out, and that's the leading factor that affects your bank rating. But how long you've been in business for, how you manage your bank account, non-sufficient funds, how many different kinds of accounts you've had with that bank, all of that stuff ties in. So we've got to get you a low 5 rating, which is a minimum of $10,000 in your bank account. If you had $70,000 in your bank account over the last 90 months, that would give you the highest bank rating you could get. You need to avoid non-sufficient funds. You need to make sure you have consistent deposits. You need to make sure you have more money going in the bank than actually coming out. You also need to set up the right business entity. Your business entity says a lot about your business. Now, you really want to choose a corporation. It's the best you're going to find for fundability. The best entity is a corporation for fundability. S Corp or C Corp, either one will work. Now, you also make sure that you want to come in and have your full business name in your business name, and you apply, including DBA if you're applying for funding. As I mentioned, the first problem is they have to find your business. And if you're applying under a DBA and they go to the Secretary of State and they don't see that business name because you applied under your DBA, not applying under your corporation name and your DBA, you have a problem. So if you're going to choose a sole proprietorship, you got to be careful, guys. A sole proprietor has a 1 in 7% chance of getting audited by the IRS. 1 in 7. A corporation has a 1 in 50% chance of getting audited by the IRS. Which do you want to choose? 1 in 7 versus 1 in 50% chance of getting audited. Stay away from sole proprietors. If you're going to be a sole proprietorship, at least add a DBA. And then whenever you apply, you need to include the entity name and your DBA, or they can't find your business and won't approve you. Best entity, corporation. You can also go with LLC or go with partnership, but stay away from sole proprietors. If you're a sole proprietorship now, consider changing it. Another reason is you're personally liable for everything that happens in your business. Look, I can and will show you how to build business credit for your EIN that's not linked to your personal social. But if you chose an entity that automatically by default creates personal liability, nobody can help you. A sole proprietorship, you are the business. You're one and the same. If the business gets sued, you get sued. I'm not an attorney. This is not legal advice. You can look it up. If you're a sole proprietor, you're the business. If you get sued, the business gets sued. If the business gets sued, if the business gets sued, you get sued. Corporation, you're separate from each other. They can come after my corporation, but they can't get to me because I'm protected. So again, you want to make sure you choose the right entity type, preferably corporation, partnership, or LLC can work as well. Now, Portia says, I'm hiring your company because I need to make sure I'm doing this correctly. That's awesome. This is exactly what we do. And even without hiring us, everybody, if we can help you with this for free on a consultation, this is what we do. We will review your fundability with you to see how fundable your business is. We will help you access your business credit reports for free. We will help see if you're set up with the reporting agencies and you don't know that you are, because if they know you exist and you don't have credit with them, they will give you a failing score. We check that out for you for free as well. And we also tell you how fundable your business is for free. So without paying us a dime, all of that happens on a consultation with us. Just give us a ring. And if you want a guide on building business credit, we have a great one at creditsuite.com/Facebook as well. So I'm going to wrap this up, even though Steve, what's up, is getting here. And Felicia, what's up, California's in the house. Okay, I am going to wrap up. But if you missed this, you can go back to facebook.com/Credit Suite. Look at this video in its entirety where we break down these fundability components. Now, I'm not done. This is about one of 3 different trainings we have on fundability. So in the weeks to come, I'm going to dive into the other fundability factors you need to know. But this all gets you on your way to creating a legitimate, credible business in the lender's mind that will make you more fundable. That's the key to getting approved. Never forget, more than half of all applications are denied not because you don't qualify. They're denied because the lender thinks the application is fraudulent because you didn't do the things I'm telling you to do. So get in the 0.5% that get approved by making sure your business is set up the right way. And don't forget, if we can help you on that, here's our number to make that happen. Now, Tawan says, how do I get the credit monitoring for my business? Go to creditsuite.com/monitoring. You can get it for $24 at creditsuite.com/monitoring. If you give us a call, we can help you get your free first month for free as well. So there's our number to give us a call. Portia says, my EIN asked for my SSN. You have to provide your SSN to get your EIN because you have to prove who you are in the United States. Also, my EIN has my home address, but my SOS has my business address. Portia, go and see if you can update your address with the IRS. They have a form you can do that, and you can get it updated with the IRS. Yes, you should. You need to update your EIN address with the IRS. There's a form you can fill out to do that. It's pretty simple online to do it. Dallas, Texas, what's up? And Jim Barber, I have LLC that hasn't been active since 2016. I set it up waiting until I was ready. Okay, I'm going to try to hit see more, but it won't let us. Ready to start the company. Is that still good? Yes, you can. Now, here's the key with this, okay? When you have an already existing entity, okay, you got it. It's 8822 form. Yes, that's the form you fill out. That's exactly right, 8822. The entity is in one of two positions. You either paid to keep it active every year. And if you did, well, then you're solid. Did you just use that entity you already have? But sometimes people let entities lapse and they don't pay to renew them. If that happens, then it might cost you more money to renew that entity than it does to actually start a new one, Jim. That's why you have to weigh that out. I would see what status your company is in. Is it active or not? If it's active, you're solid. If it's not active, see how much money it costs to make it active, then weigh it out. If it's not a huge cost difference between just making it active versus starting a new one, make it active and get that time in business. It's worth it. But if there's a huge financial difference between redoing that one, they may say, hey man, you haven't been active for 3 years. We need 3 years worth of annual report fees, and for it, that's $1,200. Now, I have to decide, do I want to set up a new entity for $100 or pay $1,200 to renew the old one? You have to determine that. For me, I pay the $1,200 to renew it because the time in business is so valuable. But $1,200 is a lot of money. So that's where you have to weigh that out, Jim. So hopefully that helps. So I'm going to go ahead and wrap this up, everybody. Again, if we can help you with Fundability, give us a ring, 877-600-2487. Free Fundability assessment where we'll tell you how fundable your business is. We'll help you get your business for free. We'll do a free search with the reporting agencies and tell you how fundable your business is as well. If you want to get approved for funding, you can go to creditsuite.com/funding to get funding to do it. You can also grab a free guide, over 1 million downloads, at creditsuite.com/Facebook that shows you exactly how to build your business credit. Portia says, ties the man. Thank you, Portia. Thanks everybody for tuning in. I will be back here next Tuesday at 2 o'clock Eastern on Facebook. All these boards are about ready to get wiped out. And then we're going to have all new boards to talk about all new topics that are about getting credit lines, getting loans, and many other things in the weeks to come on our YouTube and Facebook Live. CreditSuite.com, top right of the page, you can find our social channels. Subscribe and you'll see when we go live. We go live on YouTube twice a week, live on Facebook twice a week.